Welcome back guys, myself Piyush Goyal, Company Secretary from Jaipur and Delhi. In this video, we are going to discuss if any person or any company which is situated in the foreign country, right, and invest through the FPI route, right. So what is the FPI? FPI means Foreign Portfolio Investment. So we will discuss all of the integrities of FPI, Foreign Portfolio Investment. What are the eligibility criteria, right? And categories of the FPI, and what is the route for investment through the FPI, right? So we will cover each and every process regarding the FPI, and firstly we will discuss what are the eligibility criteria. First criteria is the applicant should not be resident in India, or should not be non-resident Indian. It means NRI, right? So it means if any person who is a foreign citizen only invest through the FPI route. Second is the applicant should be a country of whose securities market regulator is a signatory to International Organization of Securities Commission, multilateral memorandum of understanding, right? Third is who is central bank is a member of bank for international settlement, right? So these are the eligibility requirement, right, through which any company or any organization can invest in Indian companies through the FPI route. The applicant can also be incorporated or established in International Financial Service Center. If applicant is incorporated in IFSC, right, GIFT City means, right, so then applicant is also eligible to make investment through the FPI route, right, and the applicant must comply fit and proper criteria as mentioned in the FPI rules. Thereafter, uh, there are two categories of FPI, right? First category, foreign governments and government-related investors included. Pension and university funds, bank broker and asset managers are included. And in second category, right, approved regulatory funds, right, and corporate bodies, family offices, individuals, and unregulated funds in form of limited partnership and trust, right. These are the two categories through which any organization can invest in Indian companies by way of two categories, right. Third is when any entity wants to invest in Indian company, right, first of all the said entity is required to register as a FPI with the Securities Exchange Board of India, right, as per the procedure given in the FPI regulation. First of all, the user will apply for user registration. Thereafter, user registration authorization by the designated depository partnership. Thereafter, in third step, upload documents and submit DDP. In fourth step, user login in the custom application form CAF and online capture details, sign and cap details to DDP. Then this is the complete process for registration as a FPI. What is the permitted instrument in which the investor can make investment in instrument, right? First instrument is listed shares or to be listed shares. Second is exchange traded derivatives, stock, index, currency and commodities. Third is the units of mutual fund. Fourth is Indian depository receipt. Fifth is units of real estate trust. And sixth is the commodity derivatives. Seventh is the offshore derivative instrument. Eighth is the convertible notes issued by the Indian startups. This is the equity and other securities. The investor make investment in debt securities as well. What are the included in debt security? Dated government securities, listed and unlisted convertible debentures, units of specified debt-oriented mutual fund, securitized debt instrument, listed non-convertible redeemable preference shares, debtor security issued by REIT. Right? This is the securities. This is the equity securities and debt securities in which investor make the investment, right? Thereafter, if applicant has registered as a FPI in India with the SEBI, right, and thereafter the applicant has make the investment in the equity instrument or debt instrument. Thereafter, what is the reporting requirement which to be complied by the applicant, right? So first of all, there are two types of reporting requirement. First for the material changes and second for the second type material changes. In first type of material changes, what is the time for reporting? It must be reported within 7 days of occurrence of change, and supporting documents shall be provided within 30 days of the change. Type 1 material changes include change in jurisdiction, acquisition, merger, demerger, restructuring of legal form. Type 2 material changes, any change other than material change 1 should be informed within 30 days, right? And additional, what is the additional disclosure? The additional disclosure you also mentioned that to mitigate the concerns and concurrent investment by FPI in single investee company or corporate group, the threshold for identification of the BO, right? But the following are the entities which have the government has given the exemption to that government authority. First is the government and related investors registered as a FPI, public retail fund, exchange traded funds, and entities listed on the specified exchange, right? These are the entities which are got the exemption from the government for complying the said requirement of the FPI regulations, right? So this is the whole process for registered as a FPI, and the process through which you can make the investment. What are the eligibility criteria we have already discussed, right? And what are the eligible securities in which any FPI can invest, we have already discussed. Thank you guys for watching this video, and if you have any query related to this, you can also connect on the